Welcome back, everyone. We're diving deep into Tata Motors today. Their Q3 FY25 performance. We got all the goodies, their press releases, financials, investor presentations, and even the auditor reports.
Sounds like a lot to unpack.
It is. We've got record-breaking numbers from Jaguar Land Rover to discuss, a surprising surge in EV sales, and a little peek into what's going on with that pension fund issue.
Definitely a lot to dig into. Tata Motors is such an interesting company. I mean, they're not just a player in India. They're global thanks to JLR.
Exactly. And each piece of their business has its own unique story this quarter. So big picture first. The Tata Motors Group overall saw a 2.7% revenue increase, hitting 113.6 thousand crores.
Okay.
Their year-to-date profit before tax, before exceptional items, is 22.3 thousand crores.
Wow, that's a big jump.
It is a 14.5% jump from last year.
That's impressive, especially considering the economic uncertainties out there.
Right. Show some resilience there. And, it seems like those automotive production-linked incentives, the PLI, have really boosted their financials, particularly for their commercial vehicle and passenger vehicle segments.
Yeah, the PLI, it's been a game changer, especially in the Indian market. Makes you wonder, though, how they'll fare if it phases out, become too reliant.
That's a really good question. Something to think about for sure. Long-term impact. Okay, let's talk Jaguar Land Rover, JLR. Record-breaking quarter for them, their highest EBIT margin in a decade. Basically, how efficiently they turn sales into profit. Higher margin, more profitable. They also just finished their 9th straight profitable quarter, which is pretty impressive.
It really is, especially when you consider the global landscape for luxury vehicles. Kind of tough out there.
For sure.
But their revenue, £7.5 billion, a 1.5% increase year on year. That's impressive.
And they beat analysts' expectations.
Which maybe signals that luxury car market resurgence we were talking.
Maybe, yeah.
Their EBIT margin hit 9%, a 20 basis point increase from last year. Pre-tax profit, again before exceptional items, $523 million.
Those are some solid numbers.
Yeah, and I think some of that success has got to be those new models, the Range Rover Electric. That thing already has a 57,000 customer waiting list.
It's hot. And, they're also drumming up more buzz with that new Defender OCTA, taking it to the Dakar Rally and the FIA World Rally Raid Championship next year, 2026.
Yeah, get it out there, show it off.
Exactly. It's smart, show off its capabilities in a really demanding environment, gets people excited.
Venturous customers.
For sure. Will be interesting to see how they tackle those challenges they are facing, though, especially in China.
Yeah, the Chinese market, always complex.
Always. All right, well, while JLR is riding high, Tata's commercial vehicles segment, Tata CV, they're facing a bit of a different situation. They've seen declining revenues due to lower sales volume and, shifts in the market demand.
Yeah, but even with all of that, they still managed to improve their EBITDA margin. That's another profitability measure, but it really looks at their core operations.
Yeah.
12.4% EBITDA margin. That's a 130 basis point increase.
Wow. That's significant.
It is, mostly from material cost savings and, those PLI incentives.
Smart move. And they're not just cutting costs, they're also innovating. They launched over 50 new product variants just in Q3, plus they just unveiled 14 vehicles with ADAS, that's Advanced Driver Assistance Systems, at the Bharat Mobility Expo.
Keeping up with the times.
Absolutely. Got to stay competitive. And Girish, he's the executive director at Tata Motors. He's actually expecting demand to pick up in Q4 and going into 2025.
So that's good.
Yeah, he's citing government infrastructure spending and growth in the end-use sectors as the main drivers for that.
Interesting. Always good to have that context for the top, their perspective.
For sure. All right, let's switch gears again. Tata passenger vehicles, or Tata PV. This is where things get really interesting, especially with all the talk about alternative powertrains. EVs now make up 11% of their sales, and CNG vehicles a hefty 24% of their year-to-date sales.
Yeah. Big shift towards alternative powertrains, definitely a broader industry trend. Looks like Tata PV is right there with it.
Absolutely. And that Tata Punch, it's been a winner for them. It was the highest selling car in India in 2024, over 200,000 units sold.
Wow, that's incredible.
So breaking down their financials, sales volume stayed steady at 140,000 units, a slight 1.1% increase year on year. Revenue dipped a tiny bit, 4.3%, landing at 12.4 thousand crores, but their EBITDA margin, it's a whopping 7.8%, up 120 basis points year on year.
So they're getting more efficient at turning those sales into profits.
Exactly. Plus, they're launching a bunch of new products. You've got the updated Tiago, the Tiago EV, and the Tigor. And they're seeing good traction with the Curve EE, the Nexon CNG, and the Nexon
A
EV45.
lot of new models, a lot of options.
Yeah. Shailesh Chandra, he's the managing director of Tata Motors Passenger Vehicles and Tata Passenger Electric Mobility. He's pretty optimistic about their future. He sees strong growth potential in 2025.
I can see why they're moving, they're making things happen. All right, well, let's switch gears one more time, talk about Tata Motors' overall financial health and some of the big corporate actions they've taken. Their deleveraging plan, basically reducing your debt, has worked. It's led to a significant drop in net auto finance costs.
That's huge. Solid financial foundation is so important.
Absolutely. Helps them navigate whatever comes their way economically. And one of the big moves is the demerger of Tata Motors Finance, expected to happen starting July 1st, 2025, and be finished sometime between October and December 2025.
So a little ways out still.
Yeah, but big implications. It's strategic, could unlock a lot of value for shareholders and allow both businesses, Tata Motors and Tata Motors Finance, to operate more independently.
Makes sense. Focus. And there's even more restructuring coming. They're proposing a demerger of the CV business and a merger of Tata Motors Passenger Vehicles Limited with the existing listed company.
Wow, so they're really looking to streamline things.
Yeah. Optimize for future growth and profitability. Now, let's get into something a bit more complex, the Tata Motors pension fund saga. It's
Yeah.
a story with potential impacts for both the company and its employees. It's important to understand what's going on. So back in October 2019, they surrendered their exempted pension fund. This led to some legal challenges, involvement of the Employees Provident Fund Organization, the EPFO, even the Delhi High Court.
Wow, lots of layers to this.
For sure. And if you look at the independent auditor's report, you can see the financial impact. In Q3 FY25, they had to set aside an additional 22 crores for pensions because of higher salaries.
Okay, so it's definitely a multifaceted issue with a lot of potential ramifications.
Absolutely. It really deserves its own deep dive, to really unpack it. But for now, we just wanted to make sure it was on your radar as something to keep an eye on.
Good to be aware of.
So let's shift gears one last time. Big picture recap of each segment. JLR, they are killing it. Record revenue, that decade-high EBIT margin, 9 straight profitable quarters. Their success with the Range Rover Electric, their approach in the Chinese market, they're really showing their strength in the luxury segment.
Adaptable and strong.
Exactly. Tata CV, they've had a few bumps in the road with the revenue decline, but that EBITDA margin improvement is impressive. They're launching new products, focusing on technology with those EDAS systems, shows resilience.
A lot of innovation there.
Absolutely. Now, Tata PV, riding that alternative powertrain wave, huge surge in EV and CNG sales. They're knocking it out of the park with the Tata Punch. And even with that slight revenue dip, the EBITDA margin is looking good. They're focused on those new product launches and expanding in those SUV and EV segments.
I mean, when you take all of that together, it paints a really fascinating picture of a company navigating a complex automotive landscape. Smart moves, innovation, really understanding those market trends.
Absolutely. So we've got some segments doing exceptionally well, others dealing with some challenges. What does this all mean for Tata Motors as a whole?
That's the big question, isn't it?
It is.
But I mean, they're deleveraging, it's successful, they're restructuring, those proactive moves like the Tata Motors Finance demerger, the potential reorganization of the CV and PV businesses. I think it shows a lot of foresight.
It does. They're positioning themselves for growth, for sure. And speaking of positioning, their free cash flow in Q3, their domestic business generated 2.5 thousand crores. That's with improvements in working capital. That positive cash flow is crucial.
It is, funding investments, maintaining stability.
Exactly. And they are investing 2,000 crores in investments just in Q3.
Definitely not holding back. Future growth is top of mind.
For sure. So here's the question on everyone's mind. What's next for Tata Motors?
I'm sure we'll find out.
Well, they've given us a few hints. They're expecting domestic demand to continue improving, driven by infrastructure spending. We've got those new product launches coming, and a stable interest rate environment.
That's promising.
They're also projecting JLR wholesales to improve in Q4, but, they are keeping an eye on that overall demand situation, especially in China.
Wise move.
What about those financial targets? They're aiming for at least an 8.5% EBIT margin and, importantly, to become net cash positive by the end of FY25.
Ambitious, but it sounds achievable based on what we're seeing.
They're not keeping us totally in the dark either. They announced they'll have investor days coming up in June 2025, both in India and the UK.
Oh, so we might get some more concrete plans and insights there.
Exactly. So we've covered the financial performance, corporate actions, the outlook, even touched on that pension fund saga, but there's always more to uncover, right?
Always more to the story.
What's the biggest takeaway for you? Your so what insights?
For me, it's their commitment to transformation. They're not just reacting, they're actively shaping their future. That restructuring, embracing alternative powertrains, investing in R&D. They're adapting.
So it's not just cars anymore, it's mobility.
Yeah, exactly. They're looking beyond the traditional. It's a compelling story.
It is. All right, before we wrap up this part of our deep dive, I want to leave everyone with a few questions to think about.
Hit me.
Okay. So with this global shift towards electric vehicles, what role will Tata Motors play in shaping the future of mobility, both in India and internationally? Think about that aggressive EV push, investments in charging, their ambitions to become a major player.
It's a good question. And here's another one. How will they balance their ambitious growth plans with addressing that ongoing pension fund issue? Can they keep growing and still meet those social responsibilities?
It's a tough balance for sure.
It is.
And finally, think about what all of this, the results, the actions, the plans, what does it all tell us about Tata Motors' ability to handle this ever-changing automotive landscape? Are they on track for success, or are there some roadblocks ahead?
Lots to ponder.
Lots to ponder. Well, that wraps up part one of our deep dive into Tata Motors' Q3 FY25 results.
On to part two. It's been quite a ride so far.
It has. We've covered a lot, so let's zoom out a little. Big picture stuff.
Yeah, always good to step back, consider what it all means, for everyone listening.
Exactly. We want you to walk away understanding what's going on at Tata Motors. Maybe help you with some investment decisions.
Informed decisions.
Let's touch on that pension fund issue again briefly. Really raises those questions about how companies balance their goals financially with their responsibilities. Employees, stakeholders, everyone.
Yeah, it's a perfect example of how it's not just about profits and losses. There's a whole legal and social landscape to navigate.
Right. Businesses don't exist in isolation. Their decisions impact a lot of people.
Absolutely. Something for investors and analysts to keep in mind, for sure.
Okay, now let's think about the future for Tata Motors. They've laid out some bold goals, becoming net cash positive by the end of FY25, maintaining at least an 8.5% EBIT margin.
Ambitious, definitely. But, looking at their recent performance, those strategic initiatives, they seem to be on the right track. It's just, how do they handle those inevitable challenges, right? Global economy, the industry itself, it's all changing.
And those headwinds, especially in the Chinese market, that's a big one to overcome.
Yeah, China's a big piece of the puzzle for a lot of these automakers, adapting to consumer preferences there, navigating the geopolitical stuff. It's a lot.
Speaking of adapting, Tata Motors has been pretty open to new technologies, electric vehicles, those 80 systems.
Yeah, they're thinking long term, that's for sure. Sustainability, innovation, it's all part of the plan.
They're shaping the future, not just following trends.
Exactly. That's why they're so interesting to watch. They're not afraid to shake things up a bit.
Okay, let's bring this back to our listeners. What are the key takeaways here?
Well, first, Tata Motors is in transition. Big time. Restructuring, strategic shifts, lots going on.
They're not standing still.
No, definitely not. Second, their financial performance this quarter, largely positive. Growth in key areas, initiatives focused on that long-term sustainability.
It's a mixed bag for sure, but overall, progress and adaptation.
Right. And lastly, it's important to remember, Tata Motors, like any company, they face challenges, uncertainties.
The pension fund issue, the Chinese market, that ever-changing tech landscape, it's a lot to handle.
But those challenges, they also present opportunity.
True. It's all about how they respond. That's what determines success in the end.
Exactly. And that's what makes following their journey so fascinating.
It is. Transformation, resilience, ambition.
The story's still being written.
Right. We've looked at their financials, their strategic moves, even that complex pension fund situation.
But it's really about what our listeners take away from all of this.
We've given the information, the insights, but it's up to you to connect those dots, draw your own conclusions.
Empowering our listeners to be informed, engaged, when it comes to business and finance.
We want you to keep exploring, keep asking those questions, keep seeking out different perspectives.
It doesn't stop here.
Okay, now let's think about some of those broader themes coming out of Tata Motors' performance this quarter. Sustainability is a big one, right? The automotive industry is changing.
Oh, absolutely. And Tata Motors is all in on electric vehicles, alternative powertrains. It's a clear sign they see the writing on a wall.
It's not just a niche anymore, it's the future.
Consumers are demanding it. Governments are pushing for it.
Tata Motors, they're in a great position to really capitalize on that, especially in the Indian market, strong presence there.
They understand what consumers need, but, I mean, it all comes down to charging infrastructure, competitive pricing, offering a range of EV models, having options.
Right, and then there's the whole digital transformation of the industry.
Huge. Tata Motors, they're investing a lot in technology. Advanced driver assistance systems, those connected car features, it's a digital revolution.
Innovation is key, enhancing the driving experience, opening up new possibilities.
It's an exciting time for the automotive industry.
It is. And all of this emphasizes how important it is to stay informed, be adaptable. The world is changing fast.
Tata Motors' journey is a good example for other industries too, I think.
Yeah, understand those forces shaping our world, make decisions that align with them.
Okay, let's get back to Tata Motors specifically. What are some of the big questions we should be asking ourselves going forward?
Well, one is how are they going to balance their global aspirations with their presence in India, their home market?
It's a balancing act for sure. They've got to cater to both domestic and international customers.
Right. And then how do they manage that transition to electric vehicles while still, keeping their traditional business profitable, the combustion engine side of things?
It's a classic dilemma, managing disruption.
Invest wisely, manage costs, and adapt that product portfolio to meet demand.
And we can't forget about that pension fund situation.
Yeah.
How's that going to impact their financials, their reputation?
It's complex, could have some legal and financial consequences.
Investors can be watching this one closely. How do they address this?
A lot of questions yet to be answered.
The next few months, the next few years, it'll be interesting.
The Tata Motors story, it's dynamic.
Twists and turns, but we're excited to see what the future holds.
Me too. And our listeners are ready for it.
They are. They've got the knowledge, the insights from this deep dive. They're prepared.
All right, let's get into some of those specific data points, really highlight their performance this quarter. Free cash flow is a big one.
Absolutely. It's a good indicator of financial health, shows the cash they have after all the expenses and investments.
In Q3, their domestic business generated 2.5 thousand crores in free cash flow. That's positive.
It is. Gives them flexibility, invest in growth, pay down debt, maybe even return value to shareholders.
It's a valuable resource, and they seem to be managing it well.
Okay. And then there's their EBIT margin. We talked about it before, profitability measure, earnings before interest and taxes.
Right. They're aiming for at least 8.5%. That's a good target for the automotive industry.
It is. Achieving that shows they're controlling costs, pricing things right, operating efficiently.
And their performance this quarter, it suggests they're on the right track. Their consolidated EBIT margin for Q3 was 6.3%. Big improvement from last year.
A lot of things contributing to that. Cost optimization, good product mix, and those PLI incentives.
Strategic initiatives paying off. Operational efficiency.
What about their debt? They've been working hard to reduce it.
They have, and it's working. Their net automotive debt was 55,000 crores at the end of Q3. That's down significantly from last year.
Deleveraging, it's so important for long-term stability.
It is. Less interest expenses, more cash for investments, stronger balance sheet.
Shows responsibility financially.
Okay, let's break things down by segment. JLR first, stellar quarter for them.
Yeah, record revenue, strong demand, especially in North America and Europe. Luxury vehicles are selling.
And their EBIT margin, highest it's been in a decade. More profitable than ever.
A few reasons for that. New model launches, the Range Rover Electric, Defender OCTA, those were big.
Good pricing environment, strong brand recognition.
JLR, they're a valuable asset for Tata Motors.
Mm-hmm.
Their success is a big deal for the whole group.
Okay, now, Tata Commercial Vehicles, Tata CV.
They've had some tough times lately. We talked about that, the declining sales volume, market share.
But they're resilient, focusing on that EBITDA margin improvement, launching new products, using technology to boost efficiency.
They're putting in the work, and it's showing. The improved EBITDA margin in Q3, that's proof.
They're still the market leader for commercial vehicles in India, and with all that expected growth in infrastructure, logistics, they're well positioned.
Yeah, but They got to stay ahead of things, understand what customers want, keep costs down, stay competitive. It's a tough market.
Okay, last but not least, Tata Passenger Vehicles, Tata PV.
They've been on a roll the past few years. Those product launches, the Tata Punch, they're pushing to EVs. It's working.
Sales are strong, EBITDA margin is improving.
SUVs are hot right now, and EVs are taking off in India. They're right in the sweet spot.
Innovation is key, competitive pricing, expanding that distribution network, that's how they stay on top.
So looking at all three segments, it really shows the diversity of their business, the opportunities, the challenges. It varies by market.
Complex, dynamic, but Tata Motors is adapting.
They are. Now, what does all this mean for investors, for stakeholders? What are they looking at?
Well, that positive free cash flow, the EBIT margin improvement, deleveraging, it all points to solid financial footing.
Gives investors confidence, navigate those uncertain times, invest in growth, generate returns.
And the segment performance, it's mixed, but it shows their resilience, their ability to adapt.
Investors need to focus on their progress. Electric vehicles, technology integration, new markets. That's the future.
And of course, that pension fund issue. It's a concern, but they're addressing it.
Eyes will be on them, watching how they handle that.
For sure. But overall, I think Tata Motors is a compelling investment. Innovative, committed to sustainability, a vision for the future.
It's a good opportunity, but like with any investment, do your research, understand the risks, make informed decisions.
Couldn't agree more. Okay, well, let's move on to the final part of our deep dive. We'll explore those bigger implications of Tata Motors' performance, leave everyone with some things to think about.
Time to connect the dots, see the bigger picture.
We'll look at the trends, the challenges, the opportunities shaping the entire automotive industry.
2 takeaways, making sense of it all.
Tata Motors, they're like a microcosm of this whole transformation happening in the automotive world.
Disruption, innovation, striving for progress.
Let's finish this story, see what we can learn. As we wrap up our deep dive, let's zoom out a bit. Think big picture. Tata Motors, they're not alone in this.
Right. They're part of a global industry, and it's transforming big time.
Yeah, lots of things happening at once. Electric vehicles, new technology, sustainability, it's all converging.
And Tata Motors is right there in the mix. How they adapt, how they innovate, how well they execute that vision, that's going to determine their success.
Absolutely. I think one of the big takeaways here is that they're not standing still. They're not afraid to try new things, to push boundaries.
That commitment to EVs, that's a perfect example. They see the future, and they're all in.
They're not just testing the waters, they're diving right in.
Yeah, and it's not just passenger vehicles either. They're electrifying their commercial vehicles, too. They see the potential there.
Smart move. Global demand for EVs is only going to grow.
And it's not just about powertrains. They're innovating across the board. Autonomous driving, connected car features, digital platforms, you name it.
They're embracing the digital revolution, using technology to make things better for customers, for their business, creating new opportunities.
That's how you stay ahead. That's how you stand out in a crowded market. Innovation is key.
We've covered a lot, their financials, their strategies, those big industry trends.
It's a lot to process. But the main takeaway, I think, is simple. Tata Motors is a company to watch. They're a major force in the auto industry, and their story is just getting started.
So stay tuned. They're going to continue to innovate, adapt, shape the future of mobility.
And all of this, the insights, the trends, it's not just relevant to the auto industry.
Exactly. The challenges, the opportunities, they're a reflection of what's happening in the world.
By understanding all of this, you can make better decisions no matter what industry you're in.
We hope you've enjoyed this deep dive, that it's been valuable.
We've tried to make it clear, concise, give you the information you need.
Now go out there, keep exploring, ask questions, keep learning.
The world of business, finance, it's always changing. Got to stay on top of things.
So keep learning, keep growing, and keep diving deep. Until next time, see you then.